Bitcoin has broken down from its long rising wedge. Things look inherently bearish in the short to mid-term. Here is exactly what's going on right now and what technicals that we need to focus on. Bitcoin is showing some significant short to mid-term weakness. That $42,000 to $45,000 level we've been talking at length about throughout this 2021 Bitcoin series is very much in play from here on. But it's not as simple as that, for we may still proceed up. In this episode, we'll go through all the key technicals that we need to keep an eye on. And those of you who follow the channel on Twitter know already that I have just released the entirety of my Ethereum and Bitcoin position. And upon the US stock market opening today, I will commence to release my Marathon holding too, and you are about to find out exactly why. But first, not financial advice. Everything on this channel is my own conclusions only. I am not a financial advisor. And as always, if you like what you see, then please return the favor of hitting that like and subscribe button and share this episode with others who may benefit from hearing this too. Let's get down to business. Starting off on the daily chart for a holistic perspective, Bitcoin broke out of its rising wedge and at serious trading volumes. This makes perfect sense as the technicals have been long strained and in dire need of a cooling off, and we did conclude that an immediate trip downwards was in the cards. With that said, we had a huge spike on the daily candle amidst the breakout. This on its own tells us that the bulls quickly regained control, yet there are strong levels of resistance right above. What I mainly target for a bullish reversal is for this wedge breakout to be a fake out, for as we know, fake outs tend to move violently in the opposite direction. In this sense, I will happily buy back everything if or when Bitcoin were to pass its final level of resistance at around $62,000. This would bring us right back into the wedge, however for this to be relevant at all, it needs to happen fast. This here would not constitute a fake out. No, a fake out is steep and sharp by nature. And although a fake out is still unlikely, it is important to keep it within our field of vision. But until then, Bitcoin remains bearish, and until proven otherwise, that $42,000 to $45,000 target is next in play, albeit with some likely temporary support at the $50,000 level. Let's proceed by zooming in on the 4-hour chart. Amidst the rising wedge outbreak, Bitcoin totally ignored some key areas of support. It just plowed right through them. And with that said, we are gonna focus increasingly more on horizontal support lines and zones from now on. And the reason for this is because they are highly reliable. Anyone who follows this channel knows I find diagonal lines to be treacherous and notoriously backstabbing. I still look at those lines, but I never base any trading decisions on them. I've learned that the pricey way. Now, there are two levels in particular that constitute areas of significance. We're talking the support zone between 59,500 and 60,000, which is also a key psychological level, and we're talking the $57,000 to $58,000 zone. Both of these horizontal zones have had plenty of reversal action, which make them relevant. What this 57,000 to 58,000 zone means practically is that there were many recent buyers at this level who now have a chance of getting out scot-free. And the reason why we don't bring up the sellers per se is because the last dominant sellers were seen almost a month ago. And from that point on until a few days ago, the buyers have been in control and managed to push the price up. And given that we're now testing that area from below, it will create an automatic selling pressure. And especially since Bitcoin has moved down quite aggressively over the last couple of days. This wick will scare a lot of market participants, and I trust this zone to be a difficult one to break. And even if it were to, there are no guarantees it will manage to push above the $60,000 range and the $62,000 range. If we draw a fib retracement from the very peak to the bottom, we see that Bitcoin just got rejected at the 0.50 level. And as we can see, that fib nicely aligns with this key level of resistance. And by the way, some traders would draw it from here. Personally, I prefer to draw my main fibs from pivot levels, as in clear tops and bottoms, as they will then contain less noise. The only time I apply other fibs is to get fib clusters. The RSI looks tired on the 4-hour chart. The wedge breakout swung it right into a bearish channel, and I suspect we may stay within it over the upcoming days or weeks. And finally, if we look at the RSI on the 1 hour chart, we can tell how weak it really is. It's been within a clear bearish channel already back since Friday, and to any attentive technician it gave us an upper bearish blue closing and warning already back on Thursday, as Bitcoin was trading just 2% from its all-time high. These RSI strategies are fucking amazing, and I'm sure I've given you enough of samples and proof of that by now. The only issue is to detect those RSI closings in time, for it quickly becomes a full-time scouting job, as you cannot generate RSI closing alerts on neither investing.com nor on TradingView. I might want to figure out a way to systemize this, but until then I suggest you do yourself a favor and watch the RSI trilogy. While on the 1 hour chart we can more clearly see each and every bear flag so far since the peak, all of which have broken downwards, and this right here looks just like another one, and I will treat it as such until proven otherwise. But as always, technical analysis is not a crystal ball. All we're here for is to continuously identify the most likely outcomes and then position ourselves accordingly. And the more fluid we are and the better we are at understanding and adapting to the constantly fainting and changing charts, the better chances we stand at exploiting everything that happens to our advantage. By this token, and as there is a good chance that Bitcoin will proceed lower and ultimately bottom out at 42,000 to 45,000 for now, and as any reversal up and above the $62,000 level will be a bullish turn of events, given that it happens fast, the odds for selling are 2.8 to 1. And this number we get by setting the final level at 45,000 and not at 42. What this means practically is that as long as there's at least a 26% chance of Bitcoin reaching $45,000 prior to reaching 62,000, selling is the correct statistical move. And given the sudden bearishness, which neither came as a surprise due to the rising wedge, the high volume outbreak, the bear flags and the strong horizontal resistance levels above, we can safely conclude that the probabilities for a further price decrease down to 45,000 is much higher than those 26%. With that said, I'd happily buy everything back again above 62,000. The cost for this move, or shall we rather say premium to avoid high risk and volatility, is a mere 8.5% in missed out action. If Bitcoin were to proceed down to 45,000 or lower, on the other hand, we stand to save between 21 to 27%, or almost 3 times as much. Hence the 2.8 to 1 odds. But on a final note, and as discussed in full in this episode, the technicals constantly change. Whatever conclusions we have come to here may be overruled and disqualified amidst any new sudden price action turn. And this is one of the key reasons why I have decided to expand this channel with some fast and simpler technical analysis episodes, so that you can be fully up to date with any sudden technical progress. That was all for now. Thank you and goodbye.